If you're looking to make full use of all your pension allowances before the end of the tax year, you'll need to work out your unused annual allowance using carry forward. In this 444, I'm sharing 6 major mistakes people make when trying to work out their unused annual allowances, and they are getting confused between annual allowance and tax relief, forgetting about the money purchase annual allowance and the tapered annual allowance, using carry forward incorrectly, getting mixed up with company contributions, getting confused about carry forward eligibility, and calculating defined benefit input amounts incorrectly themselves. Remember that carry forward enables you to carry forward the unused allowances from previous tax years to use in this tax year, which ends on the 5th of April. You can go back to access unused annual allowances from up to the previous 3 tax years. It's an essential step to ensure you're paying the maximum into your pension without the annual allowance tax charge applying. There's a link to a previous video that I've done all about the annual allowance here, and I'll also leave a link in the description. Due to the increase in the standard annual allowance, the money purchase annual allowance and the tapered annual allowance that came into force from the 6th of April 2023, you may well find yourself able to pay in more than in previous tax years without the annual allowance tax charge applying. Now, when it comes to carry forward, accuracy is vital. Get the calculation wrong and it could mean a tax charge or the refund of the contribution. If you're in any doubt, you should seek professional help from a regulated financial advisor like me. Here's where people get it wrong. When you are using carry forward, you're working out the unused annual allowance, not the unused tax relief. So it's important to remember that for an individual contribution, you will still need relevant earnings in the current tax year to support the pension contribution. For example, if there is £100,000 worth of unused annual allowance, you will need relevant earnings of at least this amount in order to make an individual contribution of this level and receive tax relief on that contribution. Both the money purchase annual allowance and tapered annual allowance have an impact on how much annual allowance you have available. If you have triggered the money purchase annual allowance, then it's not possible to use any carry forward to increase contributions above £10,000 without paying the annual allowance tax charge. But carry forward will still be available to you for any defined benefit schemes that you're a member of. The tapered annual allowance rules apply from 2016/17 onwards, and so could in theory apply to all 4 tax years in the carry forward calculation. If the taper does apply, carry forward can still be used, and the standard annual allowance in that year is simply substituted by the tapered annual allowance for each year that it applies to. Remember also the taper parameters changed with effect from the 6th of April 2023, so you could be using 2 different calculations due to that change. When using carry forward, you must maximise the current year's allowances first before going back to use the unused allowance from the previous 3 tax years. This means you need to be planning to make a contribution of more than the current annual allowance in order to use any unused carry forward from the previous 3 years. Once you've used up the current year's annual allowance, you must use up the earliest year next, i.e. 3 years ago. Then once that's full, 2 years ago, and finally you fill up last year's allowance. If you don't fully use up the annual allowance from the tax year 2 years ago or last year, they'll be available for carry forward in the next tax year. But remember, if an earlier year includes a contribution of more than the annual allowance for that year, you already know that there will be no annual allowance available to be carried forward to use in this tax year. Importantly, you can use carry forward in conjunction with the tapered annual allowance, but not the money purchase annual allowance. Employer contributions, individual contributions, and third-party contributions all count towards the annual allowance, so these should be included when working out your unused annual allowance. When it comes to company contributions, they are not restricted by your relevant UK earnings, but they will need to satisfy HMRC's wholly and exclusively requirement in order to receive tax relief from corporation tax. But that's something for the company to worry about, not you, unless it's your business, and then you will need to worry about it. So have a chat with your accountant. Pension contributions from companies are paid gross, meaning that no tax relief is added in by the government. But corporation tax relief is applied to the pension contribution by treating it as a business expense, assuming that wholly and exclusively requirement is met. That reduces the company's profit that will be subject to corporation tax. Importantly, company contributions count towards not only your annual allowance, but also the money purchase annual allowance and the tapered annual allowance if either apply to you. As a result, company contributions that exceed your annual allowance may also be subject to the annual allowance charge or the money purchase or tapered annual allowance charge. Carry forward can also be used to cover company contributions that exceed the annual allowance. It's important to note that these charges, should they apply, will be paid by you and not the company. Anyone who was a member of a pension scheme in the year they are carrying forward from is eligible to use carry forward in the current tax year. The definition of member is very broad indeed. Basically, if you were in any sort of pension in the year you're looking to carry forward from, then you almost certainly can. Given that all employees will have been automatically enrolled in a workplace pension, they can use carry forward unless they've opted out or hadn't started work yet. In reality, the only people unable to use carry forward will be those with no existing pension provision in place. You don't need to make a carry forward contribution into an existing scheme. They can be made into a brand new scheme. Working out the available annual allowance for a DB scheme, a final salary scheme, or a career average revalued earnings or CARE scheme is a bit more complex, and it has nothing to do with your employee or employer contributions into those schemes. The annual allowance is calculated from the increase in pension benefits from last year to this year, allowing for inflation. You'll need to obtain a history of pension input amounts from the scheme administrator, but remember, the calculation of the pension input amount for these types of schemes can be complex, and different schemes will have different ways of calculating pensionable service and salary, so you should seek professional help if you are unsure. Now, knowing the most common mistakes people make with carry forward calculations will hopefully make sure you're fully prepared for your tax year end, saving you time and potentially money by way of an annual allowance tax charge. Now, we're looking to grow this channel, so it would be great if you could hit the like button, subscribe to the channel and ring that notification bell so you don't miss out on our next video. Until next time, take care.